Hi everyone, welcome to this month's Financial Markets Update. I'm Piers Bolger, Chief Investment Officer for Viridian Financial Group. Well, this month it's all about company reporting season. Australian corporates are either presenting their full year or half year results to the end of 30 June. And we're about halfway through reporting season with about 85 of the 160 companies having reported so far. By and large, it's been a relatively solid reporting season with close to 50% of companies beating market expectations. And from our point of view, when we think about that in regards to individual portfolios, we've actually done slightly better than that. So that's clearly a positive. When we think about individual corporates, there's probably two examples I'd like to talk about today. One's Commonwealth Bank and the other's Wesfarmers, clearly operating in two different industry segments. But when we're thinking about Commonwealth Bank, its result from our point of view was a little disappointing. We saw cash earnings weaker. Part of that was driven by obviously some of the operating expenses, the increase in operating expenses that we've seen on the back of the AUSTRAC scandal and clearly the Royal Commission, the regulatory environment. But equally, we've seen the bank earnings outlook start to moderate somewhat. Compare that to Wesfarmers, where all divisions delivered what we believe to be really very strong results. That was including the turnaround that we're seeing in Coles. It's obviously divesting of the Coles business, but it's starting to now operate on a far more level playing field with Woolworths. Growth in Bunnings, growth in the department stores and Officeworks continues to look really strong. So when we think about those two businesses, it's one of the reasons why we've certainly got a preference for Wesfarmers over CBA and why we think the growth metrics of some of these businesses and others such as CSL, Treasury Wine Estates, Computershare and the like remain core staples within yours and certainly our portfolios. As always, if you've got any queries or concerns about your individual client portfolio, it's really important that you speak to your advisor. We can, as I said, provide you with a lot more information in regards to our thoughts around the outlook for companies as we head into 2019 and how to position your portfolio to make sure you've got the right blend of both income and growth orientated stocks within your portfolio.